Hi everyone, this is Joe, Sagarius Real Estate, and here's your deal of the day. We have a fourplex on East 56th Street in Tacoma. It's the standard layout for a fourplex. Each unit is a flat 2 up, 2 down. It's in a nice little complex of fourplexes, some of which have been fully renovated, but they've all been maintained, and the entire complex looks to be in pretty good shape. I think the most recent one sold for about $640 or $650 back in March. And we've seen some strong appreciation across the Tacoma market since then. So $680 for this one is right in line with what we'd expect. You can see some of the complex there, one of the kitchens. Property is located here on East 56th. We zoom in a little bit here. There's a mountain biking trail here along the creek, park right across the street, brand new community center, close to schools. I think the tenants will love to live here. It's a pretty quiet area on a dead-end street. We take a look at the financials. Property is currently listed for $680. Even though the offer price here says $691, I would say come in a little bit below $680. Property has been on the market for over 50 days. It has gone pending once and came back on. So I think there might be the opportunity to negotiate even a little bit below $680. We believe the market rents for these 2-bed, 1-bath, 750 square foot units is about $1,200. As you can see, that's roughly 30, 40%, even 50% more than they're renting for now. That's based off of this. These are 2-bed, 1-bath units. So it would be this column here. Average rent's $1,300. The 25th percentile is $1,188. So $1,200 is a fairly conservative estimate. We also do put $150 per unit, or $600 total, in for the utility recovery. The tenants are the ones using the utilities, so we might as well have them pay for it. You can see if you purchase the property for $691, that's what makes it a 5.5 cap. But again, I think that's conservative, and we could certainly negotiate down even below the $680 list price. We factor in 4% for the mortgage. We project $5,000 per unit turnover cost, given that the current rents are $800, $895. It's quite possible that many of those tenants cannot afford to pay $1,200 plus a utility fee, so we would have to turn over the units and release them up. Your property taxes are $6,533 per year. We project $400 a month owner paid water, sewer, garbage. Some of that's offset by the utility recovery, plus owner paid trash. Your 7% property management plus $4,000 a unit in maintenance. The list price 25% down is $172,000. So with that in mind, you would be negative cash flowing as the property sits about $1,200 a month. That puts you at about a 2.25 cap, or a negative 7.25% cash on cash. This is what we would use to negotiate the price down with the seller. You know, who's going to want to buy an asset that costs them $1,200 a month? No one, except we know that you can get the rents up, update the units, and turn it into an asset that makes you about $700 a month. This is what we would see the property doing in probably about 6 months. We have to get either the current tenants out or get the rents up to $1,200 plus the utility fee. Obviously, if we can keep the current tenants in place and get them to pay market rent, that's ideal because it saves us about $5,000 per unit. But if we don't, we did factor in that cost anyway. So this is the East 56th Street fourplex. My information is in the comments or in the email. If you have any questions, would like any more information, please reach out. Hope to hear from you. Thank you. Have a great day.